Hi everyone, it's Stuart here again. Welcome to tonight's webinar. We're going to look at, little broadcast. We're going to look at obviously what the Fed minutes have got to say in about 10 minutes time. It's obviously very backward looking as ever, but it always it gets this high impact announcement simply because it's really what's documented for posterity. What was said by different members of the Federal Open Market Committee, the guys and the girls that decide interest rate policy in the US, and therefore influence all of us around the world, because what happens in America, ripples out around the world, as we all know. So a relatively quiet day. Obviously, the markets are waiting, certainly the stock markets are waiting on NVIDIA earnings after the bell tonight. The Nasdaq's at 21,400. We took some long positions last night on the close on the three major US markets and the DAX as well last night. So our entry here is a little bit in the money here, the Nasdaq. Stop loss is down here somewhere. The other two are sort of out of the money, I think, at the moment. But really, we're sort of sideways action today, waiting for that key NVIDIA number later on after the market close. Tonight, just run through the other two. 42,230 is the Dow, or a little bit out of the money, and there's our entry level there. A little bit out of the money on the Dow. And similarly, I think the S&P is out of the money as well. Yeah, there's our entry last night. We're out of the money on that one currently, but we've had a really good May so far. We're up this week as well at the moment. I go through all the details of the trades we put up on Discord later if you like, but I can't figure out, I can't read my own writing here. We're up 40, 54, I can't do the maths there. Anyway, we're up about 100 points, 120 points or something so far this week, and it's obviously still Thursday and Friday. It's the end of the month as well as the end of the week, so we'll be wrapping up May as well. So May, we're up for the month as well. So things are going quite well with our live trade. So join me on our Discord group. Follow the stuff we put up there. Do get on our Discord group, guys. It's where all the chat goes on. This is our main general chat area. I put the trades here under the trading strategies area. So this was last night. We were long euro yen and DAX. Euro yen's been stopped down. Was it in the money? I can't remember. No, it hit first target. I think it's hit first target, and then it's turned around. I think I'm not quite sure, but I'll look at that later on when I wrap them all up. We then added to our pound yen, our good position, and our pound Swissy. The existing second half of the trades from earlier in the week hit. We pulled the stop loss up, so locking in profits on those two. Both the stop losses have been hit. So that's those two. That first pound yen and pound Swiss trades are both closed. This second one from last night, they're still up, and there's the three US stock markets. So anyway, let's get back to tonight. What are we expecting? Well, really, they're really, caught between a cleft and a hard place, the Fed. So nothing is happening with regard to any surprises. We had a lot of members of the Fed were in Tokyo yesterday at a conference run by the Bank of Japan, and Barkin, Williams, and Kashkari were all speaking there. Kashkari is very much in wait and see mode, back to his sort of centrist sort of policies. He got quite hawkish at Mr. Kashkari, did Neil Kashkari, but he's come back from that a wee bit. But it's very much in wait and see mode. The market's really still pricing into cuts for the rest of the year, but that's looking perhaps more under pressure now than it was even a week or so, even before I went away on holiday, to be honest. We'll see. Again, obviously only time will tell, but we'll see what actually transpires. But a lot of the heavy lifting is potentially being done by the markets themselves as well. So yesterday, interestingly, yesterday's data was much better than expected. We were looking at the durable goods data, and particularly the consumer confidence data. So it's flying in the face of what many of the sentiment indicators had been saying. So the White House is sticking to its guns very significantly. Obviously, it's been this big to and fro around the tariffs, the 50% tariffs from the EU, and then suddenly it got delayed for 3 months or two. Same with when they first came in with Canada and Mexico. Whether it's a negotiating tactic or whether it's just generally a flip flop, and things are changing literally on the turn of a screw with the president. Who really knows? But the upshot is, let's just look at the stock markets. The upshot is that the fall in the stock markets that we had down here during March and April, March and the beginning of April, that's all been turned around, and we're back up again. And the next big line in the sand, that 6,000 level here on the S&P 500 is not too far away, and the all-time high, the 6,100 level, is just it's another 100 points away. But we're much better off from the stock market point of view than we were here as we started the month, the end of April, here under the 5,500 level. So it's been a very good May, very positive May, which is quite unusual for stock markets traditionally. But a lot of it's the flip-flopping, the questions over the policy coming out of the White House remain questioned. But the first quarter earnings were held up. I would say key number tonight from Nvidia, the godfather of the AI revolution. And see if they're getting these chips, these downgraded chips into China as well, but how much of an impact that has. So anything negative out of Nvidia could really pinch this rally that we've seen. Technically, for the S&P 500, you see the 20-day moving average is there at 5,780. Let's just run through all of them. The Nasdaq, its 20-day is there at 27,700 in round terms, and the Dow is now at 41,740. The key 20 period moving average, daily moving average, as we continue, as stocks continue to recover. The dollar's come back yesterday and again a bit today. And it's I say it's doing a wee bit better, but it has been fairly clobbered over the short term. So sterling, which has been doing particularly well, we rallied through this 134 for cable on Friday. Followed through on Monday. We were down yesterday and we're down again today. So 135 is a bit of a first step too far at the moment, but it's still very, very well bid. So I'd say dollar's come back in the last couple of days, but again, big supports. It's all the way down there at 133.70 for cable. So sterling remains bid. Profit taken off as we've got to 134, pushed it. And that looks like a bit of a tweezer top formed yesterday and the day before on Monday. When we went to 134.987. So sterling coming down today, but still well supported, and still supported on that 9-period moving average there. Similar move with the euro, move back up and then down for 2 days, similar to sort of tweeter top, but again, nothing to get too worried about if you're still bidding the euro to the upside. The 20-day moving average now flattening out at 112.70 around the euro area. So dollar still pressured, and all what's going on really should be benefiting the dollar. It's not happening. It really isn't happening. So it's all back in the credit market, and what the yield situation is. There's been some weak long end of the yield performance. So dollar getting weighed by that. 138 has been tested for CAD to the downside, and we're at 138.30 back today. So dollar up as it was with the euro and the pound in the last couple of days, following last week's quite significant decline below this level we'd had towards the beginning of the month. So we pushed a new month low on On Monday, we went to 136.91 under the key 137 area, but we've now back and recovered the pivot point through the 138 area for dollar CAD. The yen, I should have probably done the yen before the CAD, back to testing the 145 zone. So again, 3-day rally here. I suppose the 2-day rally we saw on the euro and sterling for the dollar against the yen, but yeah, at 145 historically, it's still a very strong or very weak yen, even though obviously we've come down very significantly from the 160 levels at the beginning of the year. Yeah, where we're going from here, it's very choppy. There's some mixed messages coming out of Japan. The Japanese trade situation with the US has been very much on the back burner. It's not been there's not been a lot of front foot chatter or deals being struck or talked about. But there was talk of them moving forward at one point, but that's all cooled recently. Hence this volatility in the exchange rate between the two key trading partners. Remember, Japan remains significantly the third largest trading individual country in the world. Obviously, the EU as a bloc is a significant bloc after the Chinese and the Americans. But less chatter about the Japanese situation, certainly about euro and China in particular when it comes to the White House. So dollar yen 144.90. A bit of a sideways action. The trend remains in the higher time frame to the downside. We just go up to the weekly here. You can see the down trend is still very much in place. We had we've had a move up this week, but it was a big from a big down move last week, and we'd had moved up early part of the second half of April and the early part of May, only to move back down again. So the trend, the dollar yen, still remains to the downside. Although the volatility coming with any movement in the trade negotiations will try and will improve that situation. But dollar yen remains to the downside. And as I say, the daily there, the dollar just surprisingly not got a lift at all. Some of this data we saw, well, it's had a little bit of a lift on the data from yesterday. There's not been a great deal of data today. Sorry, I haven't got the calendar up. If I just open that calendar here, obviously there was some Wednesday. There was some mixed data out of Germany this morning through the unemployment rate, what was the other one that caught my eye this morning? It's the French GDP was a bit of a miss, and obviously the import numbers. The RBNZ, as expected, had moved overnight in the Asian session, moved by 25 basis points to reduce interest rates there. There's been no comment from the president in the US about what's going on in New Zealand, long way away from where he is, but we'll see if there's anything here in the minutes that are just coming across my feeds at the moment of any particular surprise. I'm not really expecting any real market moving data to come from here. It's just coming across. Economic activity continues to expand at a solid pace. We've heard them say all this, despite fluctuations in net exports. Interesting first statement is about net exports. Unemployment rate remains low and labour market becomes stable. Inflation remains somewhat elevated. Again, nothing new in there. Committee aims for maximum employment. We know all that. 2% inflation over the long term. Yeah, nothing new there. Economic outlook uncertainty has increased with heightened risks of both higher inflation and higher unemployment. Said that last time as well. Held steady at 4.25 to 4.50. Yeah, there's nothing really in there. No, there's nothing to get anything. Well positioned to wait for more clarity on inflation. So it's basically what Kashkari and Williams were saying yesterday. out of Japan. You know, talk about no moves now till September. So the June July window has moved. We'll have a look at the CME in a minute. More clarity, well positioned, more clarity. So basically, you know, the market is doing, and the flip flopping in the policy from the president is really doing a lot of the work for the Fed themselves. So we could see, I mean, the irony is we could see you know, next non-farm payroll or the weekly claims, as we'll see tomorrow, start to show some weakness. But inflation still holding up or not coming down. So and unemployment not coming down. So this could be some really mixed data. A lot of that, maybe a lot of you know, these foreign workers that have decided to leave the US. That sort of labor is drying up. So those that have still got are employed, they're doing quite well. Those actually in employment. And those that want to find work are sort of finding work. So the unemployment rate still remains relatively low. So it's a bit of a sort of dichotomy between what you would normally see in a normal economic cycle because of the, you know, the impact of these tariffs and the fact that, you know, the policy can switch so quickly. But, you know, the administration would say, well, you know, all these countries are wanting to negotiate. There's obviously more chatter moving forward into the summer that we might get sort of industry-specific type tariffs rather than country-specific type tariffs. So, you know, things like pharmaceuticals come under scrutiny in particular. So, and then, you know, nothing's really been said about services trade. Obviously, the administration are very upset about sort of value-added tax and things from places like the EU. But, you know, it's still very unclear about what is on the table. But people are talking, participants are talking. Just on a political point of view, obviously there's lots of still hot potatoes out there. But, you know, Trump is saying he's making progress with Hamas and Israel. He's making progress with Iran. He's talking up that quite positively in the White House earlier on today. And he's, you know, starting to castigate the Russians a bit more publicly than he has done in the past. So 3 big hot potatoes. He'd obviously love to see some movement on all of those. But anyway, let's have a look, see what the market's reacted to this well-positioned for clarity. So it's really a bit of a non-event, as you might expect. Sorry, I've seen some other minutes here. Stuff projections, cited tariff policies implying a larger drag on activity. Participate in a durable shift in correlations. Sorry, I'm trying to skim read this. Uncertainty outlook in heightened inflation still, but they're still talking about this transitory nature of inflation. Anyway, I can't imagine markets moving particularly on that. Let's have a quick look at the forex markets. There we are. There's that 7 o'clock candle, 1900 hours candle here in London, 1800 hours GMT. Dollar weakened a tad from you know, as we say, it's had a good couple of days or 3 days here against the dollar, against the yen, still up for the day. But the immediate reaction to the minutes is rather here as the dollar yen is lower. Aussie, we have to look at the Aussie here. Aussie's up in this first 5 minutes since the data's come out. Euro 112.95, so that's come back up. It's still, you know, 113's up here today. So really negligible move because there's nothing really in that. As I said at the beginning, you know, the market and the switch, the sort of relative chaotic nature, that it's on, it's off, it's on, it's still on, but it's been delayed for a month. The numbers have come down, you know, 145%, weren't we, with the Chinese at one point. That nature, all of that uncertainty is doing a lot of the work the Fed may have to do, and, you know, businesses still have to get on with delivering for their shareholders and their companies and their and their employees. So getting through that is going to be their focus. But difficult trade-offs. I'm reading the minutes a bit more here. There's nothing that hasn't of any surprise. Of anything that hasn't been said by either member of any member of the FOMC, particularly Chair Powell. I don't know if there's any political comments coming from the White House or anything. Recession as likely as main forecast. So it's a double-edged sword, but it could be a simple. There's a notes here talking about a potentially simple technical recession. Others talking about the talk of significant recession is overblown, but difficult trade-offs if inflation proves more persistent while outlooks for growth and employment weaken. So, but as I said, there's an argument that although employment might weaken, the economy might actually hang on in there. So staff cited tariff policies implying a larger drag on activity than policies I'd assumed in their previous forecast. That's fair enough. That's talking about, don't actually use the recession word, but that's what they're talking about there. Participants noted that a durable shift in such correlations or diminution of perceived safe haven status of US assets could have lasting implications for the economy. That's an interesting comment. That's not talking about recession. That's talking about obviously the downgrades we've seen from the credit agencies for the US. But again, the administration are sort of shaking that off, saying that this big, beautiful tax bill that they're wanting to get through will reduce some of this deficit. There's some real strong question marks whether that'll actually happen. But could impact some of the poorest in the United States. They would argue, the administration would argue the exact opposite of that. So, all still to play for. So hence the sort of negligible move in the markets, certainly as far as the dollar's concerned. Let's have a look at how the stock markets have reacted. The Nasdaq has lifted, so a weaker dollar, stronger markets down that first 5 minutes, but trying to give some of it back. Nasdaq has lifted. The Dow, the Dow, also moved higher a tad, but giving some half of it back already. And the S&P, bigger move for the S&P and a less of a retrace, so it's moved up a wee bit, but so relatively weaker dollar, even though it's up for the day. And stocks sliding sideways, really having a really strong day yesterday. Remember, the stock markets were closed on Monday. Tuesday, the cash markets were open. Our derivative markets were all open here all the time. So the trend continues to look relatively positive this week. From that dip on Monday, so we're up Tuesday. Strong day yesterday, Wednesday, and we're sort of sideways today. See what Nvidia bring later on tonight as well. That could be key, pivotal as we move forward. I say we're long all the stock markets going into the end of the month at the moment, and there's a few other positions around as well. So really, that's although it's a high impact event, still obviously the FOMC minutes, 3 bulls here on the investing.com calendar, 3 big red flag on the Forex Factory. It's as we said it right at the beginning, it's a bit of a non-event given that what's going on in the wider market and what's coming out of Washington really is delivering things. There is an event going on in Las Vegas at the moment. It's the 2025 crypto conference. The vice president was there. But Bitcoin hasn't really reacted to any of the news out of there. Lots of positive rhetoric again, but nothing new. No new news, no new announcements from the vice president. It's understood that some members of the Trump family are going to be there as well, Eric and Donnie Jr. or Don Jr. But there's no conflict of interest apparently with the president having his own coin and his wife owning his own coin, but that's not a conflict of interest for me, the president of the United States. Right, it's the right policy, apparently. Anyway, Bitcoin remains nicely bid, or very well bid. We're nicely consolidating now at these all-time highs. These 109,000 we got to on inauguration day. Early last week we did push a bit high to 112,000, but nice consolidation here. Still looking fairly or nicely positive. Our 20-day moving average now is down there at 105,000, so we're 5,000 now above the psychological 100,000, which we didn't even blink at, did we? On that fateful Thursday, we smashed through the 100,000 level, and we've held that consistently, unless there's some negative news out of this, which isn't what the administration want. They want anything else, because as I was saying before, as we were down here, we were talking about this moving up. There hadn't been any positive spin. And then we had that big blowout here on the 8th, so we followed through that. So 110,000 our pivot area, and onwards and upwards it continues to trend very nicely. Thank you. And the other crypto coins sitting behind. So I'm going to wrap this up, guys, if you don't mind. It's quite late here in London. It's 7:15. I'm going to go off and see my grandson. I shouldn't put him to bed. And I will see you tomorrow. Tomorrow we're going to be live for the weekly claims. Tomorrow we're expecting about 230,000. So still well within a really strong jobs market. To be honest, I would argue, even if it come in at 230,000, 227,000 last week for unemployment claims. And we've also got the reading of monthly GDP and the quarterly GDP numbers as well tomorrow. So quite a key day tomorrow. And then Friday is really key. We've got the PCE, we've got some trade numbers out of the United States as well. And then we've got our webinar on with TPP as well on Friday as well, but more on that tomorrow on Friday. So take care, everyone. If you're not with us, we've just launched a new we've launched a new offer for the end of May. We've called it where are we gone? Here we are. Standard challenge. So if you want a $25,000 account, which is our most popular, if you put in by May 30, so it's end of May, so by BYE MAY 30 gets you a massive 30% discount from a very if you look at our prices across the board against other prop trade companies and what you get from us compared to lots of other prop trades and companies, we're still very well priced anyway. But a 30% discount from that will save you over $50, and it makes $25,000 worth of equity to play with. Gives you just under $125. So come and give it a go, guys. If you want to one step challenge, the express challenge is also there, but $25,000, $50,000 dollar accounts, they're the nice meaty ones to be playing with. Find yourself, get yourself $125 and it gets you a $25,000 account. Got some more to play with, $240 gets you a $50,000 account, gives you all sorts of angles on options to trade bigger lot sizes, but still keeping the risk, small percentage risk is what we all concentrate on. Keep risk per trade 1 or 2%. You live to fight another day. You're learning all the time, and you get into the funded account stage, and that's real money stages. If you can prove it to yourself in these 2-step challenge or even the 1-step challenge, real money is available for you. We pay out every Friday, and we're very proud about our payouts and our successful traders, and we're here to help you guys. So anyway, see you all tomorrow. Take care, stay safe, and we'll have a look at see what the minutes. We just had a look at what the minutes were like tonight. We'll have a look at what the unemployment claims are like tomorrow, and where that leaves markets, and see what Nvidia is doing today and how that's going to leave our open positions on our stock markets today. So join me later tonight. Remember to watch the Discord group. I'll be putting some more trades up later on tonight. Remember, we're getting to the end of the month, so I might be a bit less. But goals looking like we may be looking to go short. Dollar yen, dollar Swiss, Aussie yen, Swiss yen, maybe. Nasdaq we've already opened. Kiwi crosses. So yeah, we'll see what's going to happen on those positions. Quite a lot ticking around at the moment. So, but I'm conscious. Obviously, for the end of the month, I'm going to look at the big account and see where we are for the end of the month. I've been away for 2 weeks, so it's a relatively quiet month, but we're still in the money for the month. So anyway, enough from me. I will see you all tomorrow. Take care, be safe, and be good. All the best, everyone. Bye-bye.